Welcome back to the show. Now, in the battle to retain value within Ghana's economy, cargo insurance has become the latest frontier. Government says enforcing local insurance on imported goods will deepen the financial sector and support currency stability. Yet, from the ports of Tema to the boardrooms of manufacturers, concerns are mounting over implementation timelines and potential cost pressures. James Echen has been monitoring the situation and has come through with this report.
At the center of Ghana's latest trade reform is a simple but far-reaching requirement. All commercial cargo imports must be insured by insurance companies licensed in Ghana. The directive announced by the Ministry of Finance is backed by Section 222 of the Insurance Act 2021, Act 1061, which already mandates local insurance for imported goods. Government's objective is clear: retain marine insurance premiums within Ghana, reduce foreign exchange leakages, and strengthen domestic underwriting capacity. President of the Chartered Insurance Institute of Ghana, Solomon Lati, believes the policy is critical to supporting local investors. He argues that for years, substantial cargo insurance business has been ceded to foreign insurance, depriving Ghanaian professionals and institutions of growth opportunities.
I think this issue should not be an issue at all. It's a win-win for everybody. It's a win for the insurance industry, it's a win for business people, it's a win for government. Now, if you are importing and your goods are on the seas and something happens, once you have a local insurance, it is easier for you to make a claim. You contact your local broker or the insurance company and it is easy to do the claim for you. You're talking about capacity. The Ghanaian insurance industry has enough capacity for marine insurance. And beyond the local insurance capacity, there's what we call reinsurance. So it is actually better for the Ghanaian insurance industry to insure the risk at the front end and then reinsure it globally. The marine cover we are talking about is a drop in the ocean if you look at the global insurance space. So if the local insurance companies provide the cover, they still get reinsurance support for everybody. Beyond that, the money comes to Ghana. Why would you live in a country and you don't want your industries to flourish? If there's a claim, it is easy for you to claim. The companies within the country are doing well, they will pay more taxes to government, and you are fighting against that. I think that is a non-starter.
But not all stakeholders are comfortable with the timeline. At a stakeholder roundtable on enforcement, the Ghana Chamber of Shipping called for a 3-month grace period. Chief Executive Dr. Emmanuel Kofi says, while the Chamber supports the policy's intent, businesses need time to renegotiate international shipping contracts and adjust documentation systems.
For the Insurance Commission, for Ministry of Finance, for those who want to have this implemented and to have it implemented smoothly, we would need to give ourselves some time, which I call notice to the trade. A period of 3 months within which we can enforce, because this comes with sanctions of imprisonment, sanctions of heavy fine, and this is about business. And because it is about business and we want the ease of doing business to be there for those in the industry, we must allow this period for people to compose themselves, get to appreciate, know that the contracts which they are now going to enter into, they must enter into those contracts for the importation of their goods on cost and freight basis and undertake the insurance with a local insurance company, so that if anything happens to the cargo, whether it is misdelivered, non-delivered, whether there are damages to the cargo, they can make their claim appropriately here in Ghana.
Concerns are also coming from the manufacturing and food sector. Executive Chairman of the Food and Beverages Association of Ghana, John Awuni, warns that rushed implementation could increase operational costs for import-dependent industries. He says manufacturers are already managing currency pressures, and high input costs and any additional burden at the port could ultimately affect consumer prices.
I'm saying it could lead to shortage of goods in the country. It could lead, generally, depending on the cost, because generally, depending on the performance or the insurance interest rate of the the insurers, the local insurers, it could impact negatively on the cost of the goods in the country. So generally, it is you need to insure the goods with the person that you trust. If the local insurers, their rates are good and they also have a good standing, then businesses may be able to convince their suppliers that one, let us insure. In any case, we are here with them. So it may be much more easier to insure with them than to go and insure in other jurisdictions. But it is not within the domain of the importer, let me emphasize. To determine where these goods have to be insured, it is the domain of the supplier who owns the goods. Somebody cannot give you millions of dollars of worth of goods, and you come and say that I'm insuring these goods with this particular person. Remember, when you go and buy a car based on bank loan, and it is the company that funds the purchase of that vehicle, you cannot take that vehicle and go and insure in the company where you want. It is the bank that has given you the loan that determines where that vehicle is supposed to be insured. And the documents are largely being kept by the bank. Until you finish paying, you cannot claim ownership of the goods. It's the same way that happens in the international market with the goods that are coming to the country. The goods are given out on credit. The money belongs to the supplier. So you cannot unilaterally, based on the directive of your government, and say that you are going to insurance company A or the other. It could lead to serious negative impact on the.
Similarly, the Importers and Exporters Association of Ghana maintains it is not resisting the policy, but is urging structured consultation. Its leadership warns that inadequate transition planning could expose businesses to legal dispute tied to existing international freight agreement.
Also, you have a problem on the law itself, where it's stated that if once comes with the cargo without the cover from local insurance company, what it means is that you can be fined in a court of competent jurisdiction, or you can be sentenced, you can be jailed. That is, you can go to jail at the same time, or you can be fined and jailed again. So if you look at that's what the law says. If they had met with us, or if finance minister had asked NIC to meet with us, we would have asked that if they can go back to parliament to do something with, because we believe that insurance companies are also doing their business, just like legitimate business, get like Ghanaian importers are also doing their businesses, haven't committed any crime. It should be the insurance company themselves to come and convince Ghanaians that, look, Ghanaian business, I mean, by the time you were taking your insurance outside overseas to cover your cargo, now we have the financial muscles, we are prepared, we can pay the same claim quickly and timely as those companies have been doing. Then too, it will go a long way to boost our economy. It will expand the economy. More money will stay in the country here. We will support it. However, be as it may, we are not fighting it. We just said that there should have been need for the Ministry of Finance to engage us. The supplier could give you cargo on credit. Now, the terms of the cargo could be, say, okay, from the supplier warehouse to Temaport. When the cargo is leaving the supplier warehouse in Europe, come on to Temaport, the risk is on the insurance interest, or risk is on the supplier, because I have not paid him a dime. Whilst I have not paid him a dime, and he's sending the goods on credit to me, and anything happened at sea or from his warehouse from the airport to Temaport, and anything that happened on the way, who has the insurance interest? It's not me, Asake, who's buying the goods on credit. It is the supplier. So what will happen to that? Or the contract says that, okay, from the supplier warehouses to Temaport, it must get to my warehouse before I can take responsibility. So when they even clear the goods at Temaport and on the way to my warehouses, and there's any accident that occur, God forbid, and the goods got damaged, it is the insurance interest is not on me, it's on the supplier, because the cargo must get to my warehouse. That's why I take responsibility. How are we going to treat this with the law that we are having currently now?
Yet, within the insurance industry, the directive is widely welcome. President of the Insurance Brokers Association of Ghana, Stephen Yeboah, believes the reform would directly support currency stability. According to him, retaining cargo insurance premiums locally will reduce forex outflows and strengthen Ghana's financial resilience.
One of the key things that I want people to know, I want to be very practical when it comes to cargo insurance. Just look at a typical businessman. You go to import goods from China, you take our currency, you buy dollars, and then you go and buy insurance from a Chinese company, but the shipper will say, I'm sending the goods to you on CIF basis. CIF means cost, insurance, and freight. So more monies and more dollars are taken from our economy and is given to another country where people buy the insurance. And when the goods come to the port too and there are damages, the Chinese insurance company will not come to Ghana here and adjust the claim for you. So one key benefit that Ghana will get is that it's going to support the stability of our currency that we are currently enjoying, and it's going to also support importers. When you import goods and they get damaged, a local insurance company is going to help you. So that is why government is making it compulsory, and they want everybody to. So I want people to focus on the benefit aspect, how it benefits the country and how it benefits the businessman himself. So you know that when you have your container and it comes down and there is some damages, a local insurance company will adjust the claim and pay you. And that is one key benefit that we want Ghanaians to know. So don't see it as government is imposing something, or you see it as something that will benefit our nation and something that will benefit the individual companies that are going to be involved in the imports.
In all of this, the Commissioner of the National Insurance Commission, Dr. Abiba Zakaria, says the Commission is using the directive as part of a broader strategy to improve insurance penetration and expand coverage nationwide.
We have in place a number of policies that we want to pursue. First of all, what we want to do is to do what we call insurance risk mitigation. So as insurers, one of our big job as insurers is to do what we call risk assessments and mitigation. That is, before the loss occurs, what can you do to make sure that people are protected to prevent the loss from coming? So it's one of the hats that we wear as insurers, and we think that it is a very important hat, because when the event happens, even though we do what we call compensation, financial compensation, sometimes we are unable to compensate completely. For example, if somebody breaks their leg, there's no amount of financial support that you will give to that person that will make up for the leg that is broken. It is important that you can help the person to prevent the loss than just protecting or compensation. So yes, compensation is a part of our business and we intend to pursue it. But most importantly, this year also we are looking at doing what we call risk mitigation. In that one, tied very closely, is what we called inclusive insurance.
At its core, the Cargo Insurance Directive reflects a deeper national conversation, how Ghana balances economic sovereignty with trade competitiveness. For regulators and insurance, it is about retaining value, empowering local investors, and deepening financial markets. For shippers, manufacturers, and importers, it is about timing, cost control, and operational certainty. For Joy Business, James Ishen.